Hi there, welcome to Kneppy Invest and welcome to 19th of February 2025. A bit of a red day on the market today, and to be honest with you, not surprising there. Not because of a negative lead in by Wall Street. In fact, I think Wall Street, or most of the indices on Wall Street were up. I'm pretty sure NASDAQ, Dow Jones were both up. Now, the reason why I'm not surprised we're down big is because of what happened with NAB. They did release a trading update for the first quarter, and it was negative, and the market has actually absolutely punished that company. Share price down about 7%, which would be quite unusual for that size company in that sector. So we are starting to see a bit of weakness in the banks. It's the third negative report released by banks over the past week or two. Starting with Westpac, then we saw Bendigo Bank release something quite negative. Share price collapsed, and now NAB. Only CBA's report was not negative, and that just shows you that even though I would not consider CBA to be a high quality company, it is by far the best quality company among the banks, apart from maybe Judo Capital. But that's a little bit biased on my part because I am trading that company right now. Now, NAB is not the stock of the day. However, I did a video on NAB because I went to Hot Copper and there were a few posters saying, oh, this is a perfect opportunity to buy NAB on this little dip. And I just wanted to test that. And because they were probably suggesting that NAB is now undervalued. I just tested that hypothesis. Even though I'm a little bit biased, I probably would say NAB is still well overvalued just by looking at history, and that's what I did in that video. So have a look out for that video later this evening if you're watching this video on the 19th. Anyway, again, a plethora of announcements or results being released today. Really tough to come up with the top five because we have seen share prices of some companies go up significantly and down significantly on their results. I did make a trade, bought back in the Southern Cross Electrical Engineering. So that's the one trade I've made today. It was one result I was keeping a close eye on, and if it was good and I saw the share price pop up, I would buy on. I didn't buy on open. It was just after open. I put in a bid at $1.70. It opened about $1.75, and then the share price did pull back to $1.70, I think within 15 minutes. Anyway, but yeah, so many companies to choose from, and I'm going to leave out quite a few really good results in the top five stocks. So I would say maybe my top five stocks today is quite controversial, and I wouldn't be surprised to see a few comments. What about this company? Or what about that company? Their results were spectacular. Why haven't you included that company in the top five? And it's just I'm just spoiled for choice today. Anyway, before we have a look at the ASX today, let's have a look at what's been happening. Actually, let's have a look at the earnings calendar. So today we had Goodman Group release results. They also went into trading halt because of capital raising. I've seen a few companies do that, release results and also go into a trading halt for acquisitions. Who did that the other day? Oh, Smart Parking did that. Results, trading halt, acquisition, and Smart Parking is back to trading today because of the institutional placement was successful. Santos released results, yes. James Hardie, by the way, one company you don't see here is MinRes. MinRes were being a little bit sneaky. In fact, MinRes is in my top five stocks. In fact, it would have been the stock of the day. MinRes, share price down at 17.9%, released their results at 7:42 p.m., trying to get in their results well after the market had closed, hoping no one would read the results. It doesn't work like that in MinRes management. Everyone was able to read your results. I haven't read the results yet. I didn't even know they released their results until I saw the share price down a significant amount, and then I went back and went, oh, they released the results last night. So I sort of did miss it. So I suppose it worked. But anyway, share price down to $25. Now, there was a lot of talk about if the share price of MinRes got below 30, people would be buying it. Well, we haven't seen much buying today because the share price has dropped $5.46 or 18%. So it's going to be interesting to see why the share price is down a fair bit. I understand the company's going to see significant drops in their revenue, profit, and all that. But obviously, the results were worse than expected, or any sort of outlook statement the company made was a little bit disappointing. So it's going to be interesting to see why the share price is down. Anyway, so MinRes, you don't see here because they released it yesterday. James Hardie released some sort of update, quarter one or quarter three update. Stockland, which I didn't realize was a residential housing developer until I realized looking at housing developments in Brisbane, there was a Stockland one, all these other ones as well, Cedar Woods, So Stockland released their results. The Lorry Corporation, Vicinity Centres, Cleanaway Waste, Ventia, Corporate Travel Management, that is in my top 5 stocks. Luca. What else do we have here? Hansen Technologies, Data3, Navigator Global, pretty positive reaction there. Emeco Holdings, Lycopodium, Cedar Wood, Southern Cross Electrical Engineering, Mount Gibson, so many. Schaefer Corporation, which I've never looked at, St. Barbara, Shape Australia, Step One Clothing. Different reactions from both of those companies. I am trading Shape Australia, and I own Step One, and I thought the results were going to be good because of what happened yesterday. So I will talk about that company. Yes, it is in my top 5 stocks. Of course it is. Share price is down by over 20%. But it is, Lynch Group, a flour company, also released results. And COSOL released results. Coventry Group released results as well. So many. Retail Food Group released results and announced an acquisition. In fact, that is in my top 5 stocks of the day as well. Beamtree released results. The company share price down a fair bit, not profitable. We can keep on going. And another company here, I just noticed, a company called Pharmex. Yeah, PHX released results and they're profitable. I put that onto my watch list because I didn't realize that company is profitable. Anyway, and tomorrow we have Telix Pharmaceuticals. That's the one I'm looking forward to. Wesfarmers, Fortescue, Telstra, Transurban, Brambles, Sonic Healthcare, Telix. Anything else here? Net Wealth should have good results. Cube, I'm interested in that. Yancoal, not really interested. Super Retail, nah. Mesoblast, not really. IGO, nah. It's really Magellan, maybe. Mass Group, yeah. Megaport, yeah. Actually, Megaport, yeah. Chart for Megaport does look interesting right now. MA Financial, that's going to be interesting. Share price has really rebounded. IPH, I thought that company does look cheap, but then I looked at the financials and I see no growth over the last few years. Helios, Nanosonics, PWR Holding. Tomorrow's going to be really good. Universal Store, Chrysos Corporation, Genus Plus, Main Pharma, Duratech. We can keep on going on and on here. Cogstate, another busy day. The Reject Shop. And anyway, so let's go to trading economics. I don't think anything's interesting. New Zealand cuts rates by 50 basis points, but as expected, Japan export growth accelerates sharply. China stocks rise on regulatory optimism. China new home prices fall the least in 6 months. That's interesting wording. And oil rises for third session. And another thing I saw here was an article in Capital Brief. Some economists think the RBA's rate cut was a huge mistake. Here's why, and I can almost guarantee you, Warren Hogan. In fact, I don't think I'd be able to read this because it's probably you have to pay. Yep, you have to pay. Warren Hogan, there he is. Yeah. But we know that he thinks it's a mistake. He's been hounding about that. He's been on podcasts, heaps of podcasts, probably a lot of radio saying it would be a mistake if ABA cut rates. Anyway, and the other interesting announcement here was Australian startup Gilmore Space Technologies gets final approval for rocket launch. That's exciting. I have seen a rocket launch in Florida, and I want to see another one. Yes, it's one of those things where you don't realize it's until you see that this is pretty awesome. And it was sort of like a complete or total solar eclipse. Seen one of those in 2017, and I want to see another one because you can't explain it. Some people have said, no, they're disappointing, but I can almost guarantee you those who think a total solar eclipse is disappointing have not been in a total solar eclipse. They've been just outside. Anyway, let's have a look at the ASX today. And so a pretty negative day when you're looking at the ASX 200, probably 20 as well. I would say the banks are down big because of a NAB. So let's see if that is true. Healthcare pretty good, up 0.73%. And there's financials down 2.12%. Energy down also 2.34%. Yesterday it was uranium and coal. Let's see if uranium and coal have been a bit of a burden in the energy sector again today. We'll look at this by market cap. And Santos is down. They did release results, down 4.43%. So that's been a bit of a drag. Woodside down a fair bit as well. And not many companies up. Paladin up, Yanco up. So a few coal companies in uranium, but Overall weakness in this. Oh, look at that. Company called Energy Resources Australia, down 33.33%. Market cap is 810 million. Share price is 0.2 cents. They must have 6 billion. They must have, can you do the maths on this? They must have, what's that? 0.2 times that by 5. So it's 4 billion, and that's at 1 cent. 10 cents, 40 billion. They must have 400 billion shares on issue. Is that right? 400 billion shares on issue? 400 billion shares on issue. God, run away from this one. Energy Resource, the share price is like 0.2 cents, but the market cap is 810 million. 400 billion shares on issue. Gee. Okay. 400, I've never seen that before. 400 billion shares on issue. I hope you haven't been, if you're a holder of that company, I hope you haven't been heavily diluted in the past. You must have been. To get that many shares on issue, they must have done significant capital raisings. Anyway, let's have a look at financials. I would assume the bank's down big. Let's have a look. Yeah, NAB down 7.5%, CBA down. Westpac and ANZ not down as much, particularly Westpac, but Westpac had already fallen. And Macquarie Group also down. I wonder if the other banks are down. Bendigo. Let's have a look at the charts. By the way, yeah, a few other companies in this sector are down big as well. Let's just have a look at the charts for the banks. I've just changed my financial watch list, and look at AMP. So I was trading AMP, by the way, beautiful uptrend, and then the release results, pretty bad, get out straight away. For me, that was get out straight away day. Well, maybe not straight away. I did wait a little bit. I didn't see any rebound in the share price, get out. And look at what the share price has done since then. It keeps on going down. Anyway, on to the banks. I think CBA probably still looks okay. Yeah, nothing wrong with CBA. No sign of significant weakness yet. But NAB, ooh, yucky. Westpac, not as bad, but we have seen the share price drop a fair bit. And ANZ, not as good. And the other two, we have Bendigo Bank. This one looks pretty bad, I think, after the bad results the other day. Look at that collapse. This purple box could be a support level for Bendigo. And the other one was Bank of Queensland. Bank of Queensland. What does this look like? Not as bad as Bendigo, but I'm surprised this hasn't collapsed because of what happened with Bendigo. Interesting. Anyway, by the way, the insurance companies are still doing okay. And okay, that's financials. ASX 20 down 1.25%. And we know why. The banks are down big. And that has been a bit of a drag on the market. So those who are heavily invested in the banks have had a really bad week. And when I say really bad week, financials down 3.7%. And I think the big banks could be down even more than that. So those who have gone heavily concentrated into the banks, I know quite a few investors have done that. In fact, I was talking to one investor a few years ago, and I just asked, what's in your portfolio? And this person said over 50% of their holding or their portfolio is in the big banks. And the reason was because they're safe. It's like, oh. This was a fairly young person as well. I just didn't understand that. I didn't give advice. I didn't say, I think that's wrong because it's not my place to say that. In fact, it's illegal for me to say that sort of thing. Anyway, so hopefully you're not heavily invested in the banks at this point in time, although you've done fairly well over the past year. So maybe, what do I know? Maybe now it's time to get out. Anyway, let's go back to the top gainers. Top gainers today. In fact, I am not really going to focus on top gainers by percentage change. I am going to focus on top gainers by market cap. Pro Medicus. Why is Pro Medicus up 6%? Did I miss something? I doubt I missed anything here because I do own Pro Medicus. In fact, it is now my biggest holding. Nothing, just a bit of noise. Alice Williams. A bit of noise. I don't know. Pro Medicus. It's still an uptrend, nothing to get concerned about there. And why would you be concerned with the share price increasing 6%? Light and Wonder, 10%. They have made an acquisition. And I opened up this acquisition announcement and then I closed it immediately because it's an American announcement and I hate American announcements. And when I say that, I'm talking about this. So one thing Australians do much better than Americans is their announcements. And I will take that to the bank. I just don't like how the Americans, do things. This is their acquisition announcement. It's just horrible. It's just so. I just close it immediately, and that's it. No, like presentation or anything. It's just strategic acquisition, 109 pages long. And when Australian companies make acquisitions, for instance, what about smart parking? Share price up 7.22% on the back of this. And here we go. Strategic acquisition USA investor presentation. It's just so much better than the way the Americans do it. I just struggle to go through American announcements because it's not investor friendly. So go Australia, just doing this much better than the Americans. Anyway, maybe that's an ASX thing. But anyway, Light and Wonder up 10% on the back of this acquisition. I am a shareholder of this one, by the way. So actually my portfolio's done fairly well with Light and Wonder and Pro Medicus. And remember the share price dropped a lot a few months ago because one of their games they couldn't run because of issues. Maybe it was identical to another game that was run by Aristocrat or something like that. Share price on that day dropped 18.4%. I had no thoughts of selling, and now the share price is back up to where it started. In fact, there is a bit of resistance right there. There we go. And you can see there was a bit of selling. Share price did get to an all-time high, and a little bit of selling. So that's a bit of a resistance level for Light and Wonder. Venture release results. I'm just going to make sure all these companies, Venture release results, Fletcher Building release results, Corporate Travel Management is in my top 5 release results, Data3 release results, Navigator Global Investments release results up 15.2%, Southern Cross Electrical Engineering release results, Smart Parking is out of that trading halt, but they did release results, and then the acquisition. Shape Australia released results. SKS Technologies did not, unless I missed it. And I doubt I would have missed this one because, again, I'm a shareholder. No announcements. And it's only up 5.2% here. So there we go. What else? And Retail Food Group released results. And also an acquisition. And what else do we have? SSR Mining released results. And that might be it. I will go through some of these fairly quickly and maybe focusing more on the chart, looking for some breakouts. Don't want to linger too long because if I linger too long, this video could last 5 hours. Top losers again. The top loser today is Step 1, down 27.72%. Interesting reaction for the market. The results actually did meet expectations. So I struggled with this one when I saw the share price was down a fair bit. So I did get a bit of guidance from a few websites to why the share price is down. So I'll talk about that in a second. And also MinRes down a fair bit as well. So those actually are at the top of my top 5 just because of the real negative reaction from the market. Now, sometimes you will see a more negative reaction than a positive reaction because fear is much more powerful than greed. And possibly we're seeing that today. Step 1, I think there is potential value with both of these companies. Step 1 Clothing's drop today could be considered a bit of an overreaction. So I'm interested in adding to my position. So I was trading Step 1. I took my profits and then I decided to hold on the rest for who knows how long. And I didn't decide not to sell just because the dividend yield was nice. And also I didn't think the company was that overvalued. So this is an opportunity to buy some shares in that, I think, maybe. ID Australia released results, Beamtree released results as well. Both small companies, nothing much to see either one. And by market cap, NAB, bad results. Audinate, I would say Audinate and Synlait, just a bit of profit taking there, which makes sense. Australia Carbon Control Fund down a fair bit. Lycopodium down, released results. Star Entertainment Group, share price has bounced the last few days. Not surprised, share price is down, bit of profit taking. Hunger Group released results, was it yesterday? Yep. CoSol released results. Vinyl Group, some sort of litigation or something there. And that's about it. Let's just go show all companies. And that might be it. Okay, so before we get to the top 5 stocks of the day, what I'm going to do is just go through some of the other announcements. I've got 9 just lined up here. and all I'm doing is looking at the charts. So I might miss quite a few companies here, but just looking at these based off share price movement. That's what I'm doing. So we're going to start with NGI. We'll just focus on the charts. So I had a quick look at this company, sort of like a LIC, not an LIC, it's like an investment company. Share price had been drifting lower. This could be considered a breakout. Nice volume coming in. I did like their optimism. At one point in the announcement, they did mention that the results next year are going to be better than this year. That's all I needed to look at or see. Anyway, share price bounced up. I'm not sure why the share price was drifting lower after share price was in a beautiful uptrend. Don't know, don't care. But this could be a breakout for Navigator Global Investments. DTL, Data 3, also released results. Did not have a quick look at this one. I wouldn't call this necessarily a breakout just yet because the share price was at these levels not that long ago, about 3 months ago, so almost a 3-month breakout. So $8 is an important level. So nice V-shaped recovery for Data 3. Share price has gone from $6.820 to $8. Yeah, I'm assuming the results were probably better than expected. But the results weren't that good. If I remember correctly, I went through this one really, really quickly, I think. Really, oh, there we go. Report solid result in line with guidance. So the numbers itself weren't that great, but in line with guidance. So maybe the market was expecting results to be bad. Data 3, anyway, so not really a breakout there. FBU, Fletcher Building, share price has rallied on the back of their results. Ooh, that could be looking interesting. Share price has really dropped significantly over the past few years. So share price as high as $7 back in 2021. Maybe the bottom has been reached. A bit of a basing pattern there over the past about 9 months or so. Possible breakout for Fletcher Building. And I would say the breakout level would be, I'd say there's a little bit of resistance level there. Share price did get above that level a little bit back in August and then pulled lower. So if the share price can remain above about $3, that would be really good for Fletcher Building. So that chart looks actually interesting. Smart Parking, share price up on the acquisition and pretty good results as well. This one, share price has pulled back today. Not sure why, but that's okay. Chart still looks pretty fabulous for Smart Parking. What else? Venture. This is one I was holding, then I sold because of a massive drop, and the share price is rebounding nicely. Anyway, so Venture Services, nice rebound for that company. Lycopodium results look bad on first read, and just based off this, yeah, the results are bad. Now, in saying that, $10 was the lows we saw back in November and December, and the share price is just sort of bouncing off that level. So $10 could be a nice little buy level for Lycopodium. COSOL, profitable company. I didn't mind the results. I'm not holding this. I've been trading this in the past. Not the sort of chart I like. Share price down a little bit, 7%, but shares in this company can be quite volatile because of the lack of liquidity. So even though share price is down 7%, doesn't necessarily mean the market thinks it's bad results. It could have been just one person who thought it was bad. Anyway, the chart does not do anything for me with COSOL. Beamtree, share price down over 10%. So small company, not profitable, no interest in that one. So I'm not sure why I'm showing it. And finally, Shape Australia. This one I am trading. When I saw the announcement pop up, I went, "Oh, this is going to be good. It should be good, unless the market is completely wrong." Sometimes the market can be wrong, but yeah, the market proved it was right. Good results from Shape Australia. Share price at all-time high, and the share price keep reaching all-time high every so often. This is a little chart I just don't worry about this chart at this point. And the share price quite hasn't doubled, but it gets to get to, was it 360, 372. So still a little bit off from doubling, but I'll take that in a year's time, this sort of gain in a year. Yep. So I bought on the results last year. No, I bought before results. And they probably would have a nice little dividend as well. Other companies that I've not shown, EBOS, Hanson, Aluka, Cleanaway, Goodman Group, St. Barbara, PHX, Cedar Woods, EHL, which is Emeco, Mount Gibson, Tender Love and Care, which is the Laurie Corporation, Lynch Group, Stockland, SSR Mining, Vicinity Centres, Schaefer, Santos. Let's have a look at Santos because I did notice the share price was down a little bit. Oh, maybe not a little bit. That's a fair bit, 4.72%. Anyway, so those are the companies, some of the companies that have released results today. If I have not mentioned one of your companies, sorry, but a lot to get through today. Another thing I mentioned, I completely forgot. Service Stream share price went up 5% yesterday. And I was thinking maybe because they're in the same space as BSA, they do get work from NBN. And I'm thinking maybe the share price rallied 5% because people just assumed that ServiceStream was getting that contract. By the way, let's have a look at BSA. Has the share price gone up today or has it retreated? Or it's gone backwards? Okay. Okay, now let's get to the top 5 stocks of the day. Let's start off with RFG, Retail Food Group. I think this is one the market got completely wrong. Not today, but in the past few months. Share price has been under significant pressure, has pulled back a fair bit. Now, the company released their results, and I looked at these without doing any research, and my first thought was, oh, these are not bad results. They've also launching Firehouse Subs in Australia. I've never heard of Firehouse Subs. I don't mind Subway, so this would be a competitor of Subway, just to open that up. So let's have a look at some of the numbers for Retail Food Group. This was or is a company that was hated in the investing community not that long ago, probably 5 years ago. I still remember this company getting recommended time and time again by so many people, and then, then not so much. Share price collapsed, but not a bad result. So revenue up 24.7%, underlying EBITDA 16 million, up 4.2%, profit of 7.3 million, up 73.8%, so 7.3 million. And I just thought this was a really good result. So I'm just going to see if there's any notes anywhere. No, there was no mention of how their numbers compared to expectations. So it could be the numbers are better than expected. It could be any sort of outlook they've made. I don't remember seeing, oh, there it is, outlook. There wasn't any numbers in the outlook. And it might be just this acquisition of Firehouse Subs, which I've never heard of. And I just saw this picture and went, oh, it's just like Subway, which makes sense, subs. And maybe they include chips and some cookies. The subs look interesting. I don't know anything about this. This was bought by Restaurant Brands for $1 billion in 2021, and is quickly expanding the brand globally. They aim to open the first store in Southeast Queensland late this year. Hopefully, it's where I'm living, but if not, that's okay because I'm sure they'll open, if they're successful, they'll open up a lot. Voted number 1 for food quality. In which sector? Oh, yes. Well, it depends who they're comparing it to. I mean, they're comparing it to a few companies like Arby's. Ugh, jeez. Compare it to like some of the other companies. Anyway, I'll go through this because we all like food, don't we? It'd be pretty awful not to like food. But anyway, the main thing about Retail Food Group was I thought the numbers were pretty good. And if you have a look at the chart, I was expecting a pretty bad result from Retail Food Group because share price had just collapsed the last few months. Share price was at a nice level, nice little support level. So there's a really long-term support level. Actually, if we go back weekly, in fact, if you have a look at the weekly, you don't see anything because share price was significantly higher. They must have done a share capitalization or consolidation because the share price was not $300 back in 2016. So all these problems happened in 2017 and 18, so about 6 years ago. So about $1.80. It did get a little bit below that back in 2022, about $1.60. So this could be a nice time to think about buying some Retail Food Group. Now, share price has been a little bit of pressure today, and you can see why the share price, or there's been a little bit of selling. Share price has been significantly higher. Those who bought at high prices think this is dog stock. They don't care about the results. They don't care. They just see the share price rising. Now's the time to get out. So that has added to the pressure on the share price. So pretty good volume, good results, I think, and maybe a nice acquisition. I don't know, but it could be an amazing acquisition in 5 or 10 years if Firehouse Subs really takes off. But anyway, so good results from Retail Food Group. And in fact, the only reason I include it, to be honest with you, is because of that acquisition. It's food. Coming in at number 4, we have some results, corporate travel management, are results that I was very keenly following. And this was based off market and the chart. So I took a trading position in corporate travel management because the chart had turned positive, bit of a shift in sentiment. And when I saw them release the results, I was like, ooh, this is it. Let's see if the market is right. I'd say the market is right 75% of the time. And in this case, right. The market was right about corporate travel management. I was a little bit concerned about one thing. So I did see the profit guidance. I was like, ooh, that could be negative. And I was concerned about one thing in this. And I thought, oh, the market might drop the share price a fair bit. Where was it? I am going to not know where it is. I think it was in regards to either Europe or UK. And must be in Europe. Now there was something. Oh yeah, they're talking about revenue growth was further moderated by reduced UK government spending. Yeah, the region maintained a solid first half margin. That's not what I read, but there was something maybe slightly negative, or could have been perceived slightly negative in the UK business or UE business or something like that. And I thought, oh, if the market actually might read that a little bit negative, and the share price might drop just based off that. Now, if you look at the underlying numbers, it looks pretty bad. So significant drops in revenue, EBITDA, profit, underlying and statutory. So massive decrease in profit. So of the tune of down 42%. So if you just look at that table, you might go, oh, the share price should fall significantly. But again, it's all based off expectations. Do these results, or are these results better than expected? And in that case, I have no idea. I just want to see how the market reacted for this one. The other thing I was a little bit confused about, they said the long-term target, doubling financial year 24 earnings per share within 5 years. But I was thinking, is that based off first half numbers or just full year numbers? Anyway, so I think things are starting to move in the right direction for corporate travel management. Rest of world, EBITDA up 38% ex-Europe. ANZ up 53%, North America up 49%. So things are moving in the right direction for corporate travel management. And if they do achieve this doubling in earnings per share within 5 years, I mean, I wouldn't say this company is amazingly cheap, but if they do achieve that sort of growth over a 5-year period, I think you can't go significantly wrong with buying at these levels, because the share price has dropped significantly over the past few years. Anyway, so let's have a look at the chart for corporate travel management. And the main reason this is in the top 5 is because the market got this one right. So a bit of a shift in sentiment, bit of a shift in the trend in the share price. Share price reached a bottom of about 11.50. So that's about 50% ago, back in or between August and October. Definitely a shift in sentiment, a bit of a breakout. And late January, and I took a position on that breakout. In fact, I took a position when the share price broke out on the 21st. You can see the 6 or 5 days after that, share price just went sideways. That's a really good sign. Not a lot of selling pressure, a bit of a flag or a panic. Anyway, not a lot of volatility. Anyway, then the share price has just gone higher since then. So pretty good reaction from the market, and the share price is now at a 9-month high. Anyway, so pretty good day for corporate travel management, and things are now moving in the right direction. Still trying to find that one comment. That one comment that I thought maybe the market would perceive that as negative. And I should always write down where I see these comments. And what they actually mentioned, it might have been I don't think it was in the half-year report. I doubt it was in that. And I doubt was in that. And one of the things I do remember is they just said, oh, no, here it is. In fact, here it is. At the time of the appointment, it was difficult to assess the incremental impact of the business given the UK government indicated a reduction in travel spend. It is now apparent that this will have a positive impact to the volume and scale of certain. No, that was not it. It was not positive, what I read. Anyway, maybe I completely misread it. Anyway, that's okay. Share price is up 10%. Okay, coming in number 3, we have Southern Cross Electrical Engineering, up 13.55%. Bought at $1.70, so I'm happy. Share price is up from when I bought. Share price has been as high as $1.83. Anyway, so I'll show you the chart in a second. The chart was important for me taking a trading position, by the way. But the main reason I wanted to take a position was their results. I had no real expectations on this, but I wanted a bit of growth, a fair bit of growth, and obviously received that growth. Now, I don't know what the expectations of the market were. I don't think I have anything here. No, nothing here. Yeah, there was nothing comparing their results to expectations. It was just the numbers were up fairly big, and the management said the strong balance sheet supports further acquisitions which are being actively explored. I'm not sure the market would perceive that as overly positive. Anyway, so revenue up 55.5%, EBITDA 58.5%, EBIT 73.7%, profit up 67.8%, cash up to 114.8 million with no debt. So that's fairly important, and a dividend of 2.5 cents, up 150%. And then, the strong balance sheet supports further acquisitions. Reiterating financial year 25 EBITDA guidance of at least 53 million. So there is a chance maybe the market is expecting an upgrade from that 53 million because these first half numbers were quite good. It can be dangerous doing that, just expecting the management to do something or the company to do something, but the numbers were quite good. Now, the second reason I took a trading position in this one or re-entered Southern Cross is just the chart. And I was saying if the share price opens above $1.68, I will buy some shares. So I put a bid in $1.70. So the reason I put in a bid at $1.70 is if the share price opens, say, $1.65. No, I was following the opening auction. So it took a while. I think the share started trading at $9.09. And I was just following it. So initially I put a bid at $1.70. Initially the indicated price was $1.65. And leading up, about 10 minutes before trading began, the share price then went above $1.70, went up to $1.75. I think it opened at $1.75. Yeah, it opened at $1.75 and then rallied a little bit and then came down to $1.70. In fact, it went down to $1.66 and then rallied again. So if the share price could remain above, what I was thinking, if the share price could remain above, that level there, so about $1.67, that would be a good sign. That would mean at least a 3-month high. I would prefer at least a 6-month high. So you can see the share price was above these levels for a period between about July and October last year. So there would be a little bit of resistance there, but nice volume coming through. A bit of a doji, so a bit of a fight between the bears and the bulls. So I would say a lot of shareholders who did buy at those high levels have been selling today because the share price is close to those levels. So I wouldn't be surprised to see a bit of a turnover and new shareholders on the registry. So a pretty good result from Southern Cross. And I am hopeful the share price would start to move higher from here. And I wouldn't be surprised to see the share price move or get to a new all-time high or long-term high in the next few months. Might take a while, maybe 3 to 4 months. And if they do release another profit upgrade, then you'll definitely see an all-time high for this company. When I say all-time high, I'm not sure. Oh, close. Oh, yeah, you could say actually maybe the all-time high for this company was recently. Okay, so let's get away from the positive results and let's focus on a couple of negatives. First one is step one. Step one, clothing. Share price down 28.77%. Share price might be closing at $1. We're in a closing auction right now. I had a look at these announcements because by the way, yesterday the share price of step one rallied 10.9%. an okay volume. And I was thinking, when I saw this, I was thinking, and then I saw they released their results this morning. I was thinking, oh, I bet these results are going to hit the expectations out the park. I thought, oh, the share price is going to rally. I thought the results were good. I thought it was loose lips. I thought, yeah, someone knew the results and they were buying, and the market was wrong. Well, not the market. We'll say whoever bought yesterday was wrong. Anyway, so share price down a fair bit. So you don't usually see share price down this much when you're a bit unsure why the share price is down. I did have a quick look at the results, and I was a little bit confused. I thought it's an okay results. So I'm just talking about revenue and EBITDA. So nice little increase, not massive increase, but nice little increase, increase in cash, no debt, dividend interim dividend of 4.4 cents. So the dividend yield is going to be quite nice if the share price is at $1. I'm not a fan of 100% of earnings distributed while retaining growth capacity. Not a massive fan of that, but it's okay. I'm okay with that because they are still experiencing a little bit of growth. So I just went through those numbers and went, oh, the numbers are pretty good. And then I saw share price down a fair bit, and I was a little bit confused. One thing then I looked at the key metrics. One thing I didn't like, gross margins down 3.2 percentage points. Okay, so that's a slight negative. Website visits down 2.4%. Oh, that could be a slight negative. Conversion rate down from 5.1% to 4.5%. That could be a slight negative. Customers' orders down 11%. That could be a slight negative. New customers down 28%, from 182,000 to 131,000. That could be a slight negative. Returning orders as percentage of total orders from 61% to 69%. So that means step one is becoming more reliant on returning customers, which is not a bad thing. I'm a returning customer because their product, their underwear, is much better than what I can buy elsewhere. The other thing I didn't like going through this was not any growth in the United States. I want to see really good growth in the United States. Okay growth in Australia and UK. Well, Australia, I suppose 17.4% is not okay. That's pretty good. It's pretty good. It's just the United States growth. So just by going through these key metrics and then the geographical breakdown, I was thinking, oh yeah, okay, I can sort of understand why the share price is down a fair bit. Maybe not to this extreme, but the very fact that website visits, conversion rate, customers' orders, new customers are all down, and some of them are down a fair bit, would be cause for concern. And also the gross margins down would be a cause of concern. So definitely could see now why the share price is down for step one. Maybe not down that much, but definitely down. One thing I'm just going to look at now, which I have not had a look at yet, is their half year. I'm just going to look at inventory. I'm not sure if they mention it at all. Now, because there's so many results, I don't go through much stuff. A lot of these results, I have a quick look and then move on to the next one because there's so many. But I'm just going to have a look at inventory levels. So that's in the balance sheet. There's a slight increase in inventory levels, but that's okay, I think. It's not a massive increase. It's an okay. I think the balance sheet is quite strong. I have no problems with this balance sheet. Yeah, I have no problems with it. Anyhow, so this could be an opportunity now to buy step one at a better level. And that's on the assumption that maybe some of those decreases in some of those key metrics is not that bad. Maybe they'll rebound the next half year for full year. And maybe this is a complete overreaction of the market. The other thing is share price has nearly closed near the low of the day. That's another negative thing. So let's have a look at the chart for step one. That's the weekly chart. Don't forget, share price of this company was down a lot in 2022, so 2023. And then it broke out in August 2023. So it wasn't that long ago, and that's when I bought on the breakout. And this is almost a complete opposite. So last night when I went through the charts of these companies, I saw the share price had increased. I was like, ooh, what's happening here? And the share price has fallen a fair bit. Pretty big volume coming as well today. It's going to be interesting to see how the market reacts over the next few days. If we see the share price continue to fall, I wouldn't be surprised to see an eventual pretty nice bounce, particularly just based on valuation reasons. So keeping a close eye on step one for a potential trade now. Okay, so that's step one. MinRes released the results last night, and I completely missed it until this morning. Share price down 20.72%. Share price almost closed at the low of the day, just like step one. This is not good. You don't want to see the share price close near the low of the day. That means the selling has been persistent and there's no one buying, no one willing to come in and buy. And as the share price keeps on dropping, those value investors are just staying away. So that is concerning. Now, I thought maybe there would be a little bit of buying coming in when the share price gets below $30, maybe even $25. I do know there was a fair bit of interest if MinRes share price got below $30, and maybe all those who were interested, once the share price gets below $30, have already bought. There's no more buying for those left. So is there value in this? I don't know. This is a mining company. I'm going to say MinRes is now a mining company, even though they have that mining services. If say lithium and iron ore turn around significantly, price of both of those commodities go skyrocketing, MinRes share price will go with it. And I think the same thing happens with if the price of those commodities go back, MinRes share price should go back, pull back. So I think their mining services division is much less important than lithium and iron ore. And obviously the results were going to be really bad because lithium bad, iron ore no. Let's have a look. I'm not going to go through their results. Revenue down 9%, underlying net loss, so 196 million, profit of 996. So it's gone from a profit of 196 to a loss of 196. Statutory loss of 807 million, with which includes some tax impairments. And the company downgraded. Oh, this is another reason why the share price has fallen. There was a bit of a downgrade for Onslow's ions and tributal volumes. In fact, a fairly big downgrade from between 10.5 million tonnes, but from a range between 10.5 and 11.7 million tonnes to 8.8 to 9.3 million. And they also raised cost guidance a fair bit. No, not a fair bit, just a little bit. Okay, so this is bad results, maybe missed expectations, and also a downgrade in Onslow Irons. Funny enough, in Market Index, they just mentioned here, after the company unexpectedly released its results late on Tuesday. Not sure if unexpected is right there, but that late may be trying to beat the crowd. Sort of work with me, but not with the market. Okay, so let's have a little chart for MinRes. Oh, by the way, I'm just going to have a quick look because I saw nothing in regards to results, how they compared to expectations. So I'm just going to have a quick look at MinRes to see if it's in Capital Brief. Here we go. MinRes shares dive 10% after swing to your half-year loss. So this is focusing on the loss. Yeah, okay. Yeah, okay. Chris Ellison mentioned, I acknowledge investors' focus on our balance sheet, which I have not looked at yet, which reflects a period of high construction spend at Onslow Iron. Capital expenditure peaked in the first half, and Onslow Iron is now generating positive cash flow. The lithium division responded to a sustained tough global market by further reducing costs and improving performance. It has been a challenging 6-month period for MinRes, but our company has a history of weathering storms and coming out stronger. I probably would agree with him. I do think that there is some price point where there is really good value for MinRes. I'm not sure that is just now. Share price is in a well-defined downtrend. A lot of buying came in when the share price did hit $30 back in September. You can see a really good bounce. But at this point in time, I would be just waiting to see any shift in sentiment. And the share price now is at, last time share price was this low was back in 2020. Funny enough, at $24 is a nice little support level. Not a significant support level, but it is a support level. So pretty bad looking chart. Yeah, and I think that downgrade, it's a downgrade. That's a pretty significant downgrade for Onslow Iron. Anyway, so that's the results today. MinRes and Step One really disappointed the market. Share price of both those companies down over 20%, but our market was led lower today by the banks, in particular NAB. Disappointing first quarter from that particular bank. Now onto some comments. Just going to refresh this. So Gerard Bernane says, thoughts on SGI and AMI? Well, I am trading SGI stealth, and I mentioned AMI. No, that was AIC Mines, which is A1M, not AMI. This is AMI is I forget. AMI AMI Aurelia. That's it, Aurelia. What I'm going to do is just have a look at the chart for both. I do know much more about Stealth. They sell stuff and fairly low margins. One of the reasons why I was excited about Stealth Group is because they did have 5-year aspirations. I think it was 5-year aspirations or something. They had some long-term goals. And I love it when companies have long-term goals. It gives everyone a focus. Employees a focus. They can become more focused. We have a goal. We're trying to reach that goal. And I really like when companies have long-term goals, even if they don't hit those long-term goals. We saw this with, what's that company that has gone bye-bye? They were bought out. Start with, what was it? Company? Good. Oh, how can I forget? The software company that was bought out. Anyway, this company had 5-year goals. They kept on having 5-year goals. And one year they missed those 5-year goals, but it didn't matter. The market didn't care because they released their new 5-year target, and it was showing that the company was going to have significant growth. Can't believe I've forgotten that company. I was a long-term shareholder of that company. And then they got bought out, and I was like, why did you accept it? Anyway, Stealth Group is nowhere near that quality of this company. For some reason, I want to say it starts with A, but I think it's because I'm thinking of Ordinate for some reason. It's not Ordinate. When you get older, your mind starts to go. Anyway, this is a pretty good looking chart. I've talked about this in the past. I'm a member of this investment group, and this was actually a favored company of that investment group. They all started selling. See this rise back in September last year. They all started selling. And I was like, why are you selling? I didn't say this because I'm shy. I was thinking, why are you selling? And it was like, and they give reasons why they're selling. So you don't have to ask the question. But one of the reasons they were selling was because of valuation. The share price rose significantly. And I was like, well, maybe the company's overvalued. And I just wanted to say, but look at the chart, look at the volume. Really good volume, really good chart. And then the share price went sideways for about 2 months. And then another rise in share price, a little bit of dip, and another rise in share price. We've had a few rises. So they sold at, say, 30 cents. Now the share price has almost doubled since then. And I'm no longer a member of that group because I just get frustrated when that happens, that sort of thing happens. Even with myself, when I might sell because of valuation reasons. So I want to get out of that mindset, just selling because it's overvalued. It's a really tough thing to do. And just focus more on the chart. So at this point in time, I have no reason to sell Stealth Group. I'm going to be really interested in their results because I want to see how they are moving towards those targets. And at this point in time, I think the market is quite positive in the share price. And the valuation of this company is not that stretch, even though I would not consider Stealth Group to be high quality. In fact, the market cap's only 65 million. P/E ratio of 41.79 million. This company has a fair bit of revenue. Like in the last year, they had over $100 million of revenue. They want $200 million of revenue in the next few years. I'm not sure what time frame that is, but the margins are really low. So $100 million of revenue, a profit of 1.36. So I'm hoping the company can increase their revenue, but also increase their margins. That's the sort of the holy grail. Increasing revenue significantly, increasing margins significantly. And so you see a double bonus. Two really good things happening to profit. Revenue increasing, but also margin expansion. So there is a possibility Stealth Group is moving towards that point. The other one was AMI, Aurelia. I don't know much about. I'm assuming this is gold. $389 million market. I don't know if this company is. Well, having a look at revenue, the last 3 years has dropped. So I always look at revenue. Now, this is also a commodity-driven company. If it is gold, maybe it's copper, I don't know. If it's gold or copper, the price on this company will be mostly driven, not completely, but mostly driven or influenced by the price of that underlying commodity. Anyway, so really I have no thoughts about this. Now, if it is gold, it should look really good. All gold companies' charts should really look really good because of what's happening with gold. If it's not gold and it's copper, this chart probably looks better than copper. Anyway, so in fact, you can tell what the company does. It says it focuses on gold, copper, silver, lead, and zinc. Let's have a look at the weekly chart for this one. You do get a bit different perspective. So if you have a look at the weekly chart, in fact, you could say there was a bit of a breakout at 22 cents. You can sort of see that little breakout, 22 cents, right there. And the share price is right on 22 cents, right? It's pulled back. This could be a nice little pullback to that resistance level, which now may be defined as support. Our DG guest wants an update on those three companies. James Dean says, get a civil engineer or property inspector to check the house. It hasn't been built yet, but that will happen. Just James Dean says, Challenger might be cheap. Might be cheap. Have a look at that. P ratio of 8.5. It could be cheap. I thought the results were not that bad, but what do I know? Some congratulations on house. May your house be built soon, and may you pay it off easily by 10 times return in a year. Well, the good thing is I won't have much debt, if any debt at all. But I might have a little bit of debt just because I don't want to. I have enough money to completely pay it off. But that would mean I have to decrease my investments by a little bit. And I might not want to do that, which means I might just have a bit of debt. So I haven't quite decided yet. Haven't quite decided yet. But I have no problems with paying it off. I could pay it off within a year. And it all depends on investments, yeah. Just James also says NSC owns 31% of BSA. NSC been in trading halt since 14th. They knew BSA going down. Is that NAO something? Is that NAO? NSC? NAO Small Cap Opportunities. NAOS. They released a trading update. Was that company update yesterday? Yes, it was. Share price down 25%. And that's because of BSA. Why would you be owning so much of that particular company? I don't know. NSC. Let's have a look at the chart for NSC. NAOS small caps. You have so many small caps you can choose from, and you chose that one. Oh, the chart looks horrible. Ew, geez. NAOS small cap opportunities is not a good fund manager to buy into. Share price has more than halved since 2 years. It's more than halved. Ew. What are we at? 58 minutes. Might have to. Oh, what's doing says inaugural dividend. That's the word I was looking for. Inaugural. Thank you. What's doing? What's Dad doing? Inaugural. That's the word I was looking for. Virgin, inaugural. Yeah, it's all the same. And so thank you for that. Anyway, that's all I've got for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.